Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for October 15th to October 19, 2018. And the story in the COM dollar land was actually the relative strength of the Aussie and the Kiwi into the end of the week despite risk-off sales. And I think the interesting dynamic that's kind of happened here is that Aussie and Kiwi, which are effectively the second and the third highest yielding outposts of dollar, are actually getting the benefit of risk-off flows on yield differentials. What I mean by this is that as risk-off flows happen in the US, the market begins to worry about the possibility that the Fed is going to take its foot off the gas pedal. The Fed is not going to raise rates nearly as aggressively as has been priced in. If that's the case, the interest rate differential between Australia and the US and New Zealand and the US actually becomes less negative, therefore more positive to the currencies, and they get these relative strength flows. And that's, I think, the dynamic that is unexpected. Typically, both of these currencies get hit very hard when you have lots of risk-off flows, as they're used to be viewed as risk currencies. Now, I think they're sort of a shopping alternative on the high yield spectrum, whatever minimum yield that is in the FX land at this point. And that's created a completely different change of trade. So watch for that dynamic as the week develops and see if further risk-off flows actually create a relative strength bid to Aussie and the Kiwi. As far as levels go, they really haven't changed much. We're still staying within the 70-72 level on the Aussie. The Kiwi is 64-66. Dollar CAD is its own animal as always. We do have some Canadian data this week that should be interesting to see, because if that's supportive, that could be positive. CAD generally has been it wasn't as strong this week as it was the week prior, but generally still remains, I think, relative bid. As I said, the only other central bank in the world that is considering raising rates besides the Fed is the Bank of Canada. The data out of Canada continues to be relatively good. We have important data out of Canada coming up at the end of the week. So if it proves supportive, it still looks relatively good here. However, this 131 is the key resistance, with support now at 128. Let's take a look at the calendar, just see what the data is. We have a little bit of data in COM dollar land. We have the Kiwi data here with CPI. That actually could be sort of an important data set. Here we are bearish Kiwi data. This comes out Monday night, Tuesday to you guys, mainly because food and commodity prices fell a little bit. New Zealand data last week was actually surprisingly strong. We had positive, much better than expected GDP data that beat. So it'll be interesting to see just how muted the third quarter CPI data is, but that is going to be an important data set. If it's very, very muted, it's simply it's not like the RBNC is going to move one way or the other, but certainly it gives it more scope to not move before that. Generally, I think Kathy actually is bearish Kiwi all across the board here. She thinks the services index is going to be negative as well. Now, moving on into the middle of the week, I don't think we have anything in the COM dollar land until Wednesday, when we have the Australian employment data. Here also, she's not bullish. She's bearish Australian data, but sort of a half conviction view, two-level conviction rather than one-level conviction, mainly because there was a stronger manufacturing PMI, but the construction and the services is the much more important PMI. That was weaker. Remember, we've had just blowout numbers on the employment front out of Australia, so even a small number, it still could be relatively positive. Therefore, I don't think it's going to have much of an impact on Aussie one way or the other. But that's the major fundamental pivot that we have in front of us. The end of the week becomes a much more interesting tradable event as far as the Canadian data goes, because that could have a big impact. We have both retail sales and CPI. No view from us just yet because we don't have the PPI data, and the wholesale data was positive, but it was offset a little bit by the lower PMI data in IV PMI. Overall, though, my very unscientific vibe is that I think Canadian data is going to be hotter than colder, and therefore provides perhaps a second positive boost to Canada in 2 weeks. Therefore, that 131 is probably a much better level to sell than it is to buy at this point as far as the charts go. Let's take a look at the charts here, just see how the charts are shutting up. So here's Aussie. Aussie's still very much in a very serious downtrend, but starting to stabilize ahead of the 70 level. We saw that all of this week, having a hard time obviously clearing just even the 7130 level, excuse me, 7150 level. The cap here is probably 72, maybe 72.25 or so. But overall, 1, 2, 3, 4 days where we held the 70, 1 day above that, pretty decent sign that there should be more than just a 50, 70 pip move off the bottom here. The lows all the way here were, what were the lows here? Around, let's say, call it 70.30, 70.50. We held 70.40. We really held right in front of that 70 level. And I think I would say as long as this 70.40 is not breached, this is more of a buy than it is a sell. So this is a small risk here. You really are not trading. You're not trading more than 70 pip risk here. Because if it breaches the 40s, it's very likely that they're going to start to push it towards the 70-100 level at that point. To really give yourself bigger margin of error, I would probably put the stop at maybe around 70.10, because once it gets to 70.10, the run towards the 70-100 is pretty much a foregone conclusion. But it's if you really just want to test the support at 70, not a bad place to come in here. We had a little bit of a sell-off on Friday, maybe even a little more of a sell-off into Monday. If the data comes in negative on Wednesday, I don't know how much of a negative impact that's going to have. As I said, it's really going to be much more a function of where U.S. equities goes, and I don't think the U.S. equities are really hopped up for a huge rally. Therefore, Aussie probably looks like a pretty decent place to hide out for a possible anti-dollar rally here. Anywhere below 71, at 71, probably a very decent risk, because you're only risking at maximum 70 points to the downside for a move back up towards the 72 level as a natural flow on a recovery basis. Kiwi also looks okay. I mean, Kiwi is doing the mini-me version of the Aussie here, right? It is holding above the 64s. Maybe you might want to wait until the CPI data comes out of the way, because that's sort of the major fundamental piece of news before establishing a position. I still don't think, even if CPI comes in cool, it would be something that would broach the support here. The support broached here would have to be done on much larger fundamental factors of just probably a strong U.S. move. It's really going to be a pro-dollar, anti-dollar move. And in some ways, I think the calm dollars, the antipodeans, are probably the lowest volatility, easiest way to try to trade this anti-dollar move, because they're just not going to offer you too much risk, even if you come into the trade. So coming in here as a secondary idea versus the Aussie, you could probably try to buy it around 65. The stop would be 64. The lows here are, yeah, you really honestly 64.40. If you're below the 64.50s, this whole assumption is wrong. This bottoming assumption is wrong. But on the other hand, if we hold these levels, it's very likely we come back, could even challenge the 6600 level to the top side. And then Canadian, always its own story, And let me just get here's the dollar Canada move. You see the 30, it's really rejecting the 131 level. I'm happy to kind of short here against this 131 level stop, because I think, just as all the other commodity dollars, this is a anti-dollar trade here with the potential now to back up to 29. Especially if we get positive Canadian data, we certainly could take out the 29s by the week's end, and then come back and challenge all of these 28 tests. We filled the gap, right? Filled the NAFTA done deal gap, right? This was the gap down. We filled it up, found the resistance at 131. Here, if you're trading 31.20, you're clearly wrong. So again, here, 100 points is all you need to risk to just establish a pretty decent position. If you're at that level, you're clearly wrong. It's a clearly pro-dollar trade. At that point, everything just turns around. Another really interesting trade for just a pure pro-dollar, anti-dollar trade as the week begins. Wish you guys the best luck, the best trading. Boris, over and out.